There is more to silver than just price. However, I just recently shared in a video about a situation where silver indeed did double in price. But what I'm going to be talking about in this video is a number that is far more important. As the debt clock is ramping up, let's explore! Price is very important, make no mistake, but we have to take a look at silver from a couple of different angles to fully understand it. And that's part of what this series tries to do, is to give you some ideas about what makes silver what it is and what makes it valuable as opposed to expensive, or in our case right now with the spot price so low, not so expensive. A lot of it has to do with this number here, the dollar to silver ratio. And now we're measuring it over a 5-year time span, as we have been doing the last several times we've done this video series called Silver and the Debt Clock, because the dollar to silver ratio now has been hanging on to 0 per ounce. But the good people at the debt clock help us to understand why that is the case. I pretty much nailed it in the first video that I did before they started showing these numbers about the dollar to silver ratio, because again, I can't stress enough, because people will still come in and saying, yeah, the silver is not that price, it's never going to be that price, it's never going to be 0, and unless we have an absolute crazy collapse or turnaround system, I don't think it's going to be $1,561 an ounce either, or if you measure it over the period of 10 years, still well over $1,100 per ounce. What does that mean? It's the number of dollar bills, that's right, these units right here, that are printed year over year compared to the amount of silver ounces mined globally year over year. And so it does not necessarily mean that that's where the price of silver should be or where it could be. It's a matter of giving you an example of just how rare silver is compared to the amount of dollars that are in the system these days. And there's a lot of dollars in the system. Do not let this number fool you. Even though it may be accurate, we are pulling back about $502 billion out of the currency supply right now. That's what that number means. But the amount of dollars that have been added since 1913 continue to grow, and albeit at a slower pace, but that just gives you some perspective. That's one of the reasons why the dollar to silver ratio has ramped up, and therefore the debt clock has ramped up. You know, the debt clock has ramped up in multiple different ways, especially when you look at these numbers here. We've got total interest paid percent. We've got U.S. total debt, $97 trillion total debt. We have the U.S. national debt, the official number, $34.2, almost $2 trillion worth. And the debt per taxpayers is enormous. And if you break it down per citizen, and still, even though less than half, it's still a great big number. And the best way we can tell about where we are at nowadays is we are at near wartime levels of spending in this country. You know, in World War II was at 129%, the debt to GDP ratio. Now it's at 122%. They just keep spending, adding literally about $1 trillion in a week or two time span, about 14 days that had occurred not too long ago. And all of that is increasing the M2 money supply. Look at this number here. This gives you some idea when compared to silver. This is how much of the M2 money supply is decreasing now by that number, that negative number we showed earlier. This is the amount that's in right now. But since 2000, look at that, it's growing. And it's growing pretty fast. The number of the M2 money supply compared to the number of dollars. There's a difference there too. To put it in perspective, let's consult Fred. He lives in St. Louis. That's right. What does Fred mean? It means Federal Reserve Economic Data. From the and this comes out of the St. Louis Fed. You probably have seen this chart before, but this gives us some insight, and I've shown it before, but we've spent a little bit more time since then. But look through the course since about 1960, the gradual increase Of course, back then it was still pretty big increases. And look here, we had the inflation crisis in the 70s and 80s ramped up a little bit more, but that was quite a time period. These gray lines represent recessions that we've seen, official recessions that we've seen. And there was a very thin line here in 2020, very minor recession. Since then, we've not had a recession, and very minor one during the COVID era, but there's a lot that was shut down. It was all propped up by government spending, those stymie checks, government money, hence this massive, massive increase that we see here. Let's zoom in and take a look at this a little more to give you a better idea of how much money has been printed. And this all ties into silver, because even though the price is not reflecting it in the markets in terms of the spot price, the true price discovery, as we've seen here in the United States and in the West in general, as well as some parts in the East right now, is really a better example of the overall reality of the silver market. And to this, quite intriguing. Look at that increase, and it's gone up, and now it's coming back down, but then it started come back up again. It's wavering around this time, this area right here. So it's ramping up again as of December of last year, 2023. And I think that is what's causing some of the increased debt, and of course that ratio there that we see on the debt clock with the silver to dollar ratio, the amount of dollars that are printed year over year. And the dollar supply is increasing, added. This is the amount of pullback, but think about it. There's a lot of dollars that are as well that are being digitized and created as well. So that is interesting, and I'm not sure exactly how that's measured, the nuance there, but this gives you an idea of what we're dealing with here. And so that means that when you think about silver in those terms as a ratio for the amount of dollars that they can just print out of thin air or digitize out of thin air, that should give you some solace and some appreciation for silver, for the silver as a metal as a whole. You know, they can mint millions of silver eagles each year, but the thing is that it takes a lot of energy, time, mining, refining, and the like, and fuel in order to create a single silver eagle. And as they continue to mint those, when you have those in your possession, it does not just go away, dissipate, disappear, or become revalued. No, it stays and maintains its set of value, especially when you look at it compared to the ratio over the past 5 years. And I'm glad that the debt clock people further to help us understand exactly what's going on here, because right now we're looking at it in the scheme of the overall supply of dollars that are out there and that have been created year over year, over the past 5 years and over the past 10 years. And if you were to take this to 20 years and so forth, well, the numbers would just continue to show themselves to where the scale of how much money has been printed over the years. Because over 10 years, that number is less. By the way, the same can be said for gold as well. It's just, it's a good measure. This is why I'm doing this series. And if you enjoy content like this, I hope you will consider pressing that like button down below and subscribing to the channel if you found value in what I do here. But this is a series that I've been doing that's unique to this channel, to give you an idea and explain what these numbers mean, what the difference is between these two. I've explained this pretty much in every video that I've done since I made this change months and months ago. But it is something that is quite profound and an eye-opening that far extends beyond price. And I think that is what is so valuable, to give you a little bit of a different view of silver and a paradigm shift in thinking. Price is important, but value is what this represents. It represents the value that the metal has. Even in modern terms, in terms of manufacturing and the like, and taking out the historic contents of silver, this gives you a little bit of perspective. Like with any other commodity, really, and most other things as well, too, that hold and maintain their value. Silver doesn't just go away. It doesn't just disappear. It doesn't reconstitute itself. It doesn't degrade. It doesn't erode. It may tarnish, it may discolor, it may have spots that form on it from time to time, but it doesn't take away from the actual intrinsic value that the metal has. And I think that perspective is what I want to communicate with you in this video, because silver is a beautiful metal. And you can see here the silver eagle being the most popular bullion coin in the history of the world. Look at that big fat milk spot on this one. But nonetheless, this just gives you some insight, especially when you have one of these things that say $1 on them. Well, think about this, folks. They are monetized. These represent part of the ratio. Every dollar that's out there probably includes these dollars. And there's a couple million of them that are minted each year at least, right? So when you think about that, these are dollars too, right? So you just would be foolish to take them to a bank and spend them as dollars, dollar coins. But nonetheless, they are what they are. And of course, people have asked the question, can I take one of these and pay my employees in silver based off of the denominated dollar worth and to pay less in taxes? Yeah, good luck trying to get away with that one. But nonetheless, there it is. It all goes back down to Fred and this money supply. If they can't help it, they got to keep going. They got to keep printing that money. And that's going to happen in spite of high interest rates and in spite of the supposed so-called quantitative tightening. Well, there's not much tightening happening right now. I tell you, with this stuff, especially since April of last year, it's been above this point. So it's been negligible decline. There's a lot of Federal Reserve notes out there around the world. And I don't think we're going to see this constrict that much anytime soon. In fact, this stuff here, what's happening right here, let's zoom in on this, to give you an idea of GDP numbers. This is what's contributed to the high GDP numbers that we've been seeing lately. Government spending. It's fake, folks. But silver is not fake. Hold on to your silver as much as you can for as long as you can. And be encouraged that you're doing the right thing by having silver as part of your portfolio. I hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.